Hey everyone, Chris Hooten here. I wanted to give you some information on buying a house and how to shop around for the best mortgage rate possible. So first of all, I'm Chris Hooten with Guaranteed Rate. I've been a mortgage loan officer for over 20 years. And over all that time and all that experience, I've learned how important interest rate is. Interest rate, fees, APR, all that stuff, things that kind of get overlooked, especially with first-time home buyers, because it's such a overwhelming experience. So just wanted to give you a quick little explanation of how important interest rate is and why you should definitely get at least two and sometimes even three different quotes when you're shopping around for a mortgage. And that might sound counterintuitive coming from a mortgage loan officer, but I encourage my clients to shop around to see what the market is like out there. Because number one, I want to know that they're getting the best value with with my experience, my company, our efficiency, and they don't have to sacrifice all that and pay a higher interest rate. So $300,000 purchase, okay, which is probably around the average right now in this area, maybe a little bit on the higher end, but definitely in the middle of high to low. If you have only a 0.25% higher interest rate, so 0.25%, over the life of that loan, you're going to pay an extra $15,000 in interest. Okay, you might say, well, hey, I'm probably not going to be in there more than 8 or 10 years. Okay, well, do the math. That's still a significant amount and thousands of dollars that you're paying that you don't have to. Okay, most mortgages are exactly the same. They're either a 15-year or a 30-year. They're either an FHA or conventional. So the only difference then becomes the interest rate. So it's not like shopping for a home where each home is different in a different area, different amenities, things like that. Mortgage is pretty black and white. There's obviously different programs and things like that, and it is custom fit for you. But when you get down to the nuts and bolts, how a mortgage is calculated, very, very basic. So the interest rate is very important. So I give you an example of a 0.25% difference. In these days, going through what we're going through, interest rates can vary significantly from lender to lender, and I see many, many times where I'm pricing against a competitor and I'm 0.5%, 0.75%. I've even seen some where I'm a full percentage point better. I've also seen times when someone else is better, whether it be an online lender or a bank, and then we'll have a conversation about what the difference between that lender and myself is and where the value is. But shop around, make sure you're comfortable, make sure you have all the information, and make the right decision. Guys, I'm Chris Hooten. I am your MLO. Thanks a lot.